The Beginner's Guide to Trading. Everything I wish someone told me on day one. Let's go. Hey friends, welcome to the Beginner's Guide. Before charts, before candles, before any of that, understand what trading actually is. It's an auction. Buyers on one side, sellers on the other, fighting over a price. When buyers get aggressive, price climbs until sellers show up. When sellers take over, price falls until buyers step in. That's it. That's the whole game. So a chart isn't magic error. It's a scoreboard. Every tick is somebody's decision with real money behind it. Your job is to read the fight, not predict the future. Now, AW time frames. The same market looks completely different depending on how far you zoom out. On the daily chart, each candle is one full day. On the 5-minute chart, that same day is dozens of candles of noise. Beginners lose money reading a 5-minute panic like it's the whole story. Start higher, Waro, daily, or 4-hour. The bigger the time frame, the more real money it took to paint each candle, and the harder it is for noise to lie to you. Support and resistance. This is where the fights happen. Support is a price where buyers keep showing up. Watch this chart. Price falls to the level euro, bounces. Comes back euro, bounces again. A third time euro, bounces. That's not luck. Somebody keeps buying there with size. Resistance is the mirror image abao, a ceiling where sellers keep stepping in. And here's what matters. These levels are where the information lives. In the middle of nowhere, price action is noise. At a level, every candle is a clue. Is it holding or is it breaking? Notice I said levels get defended ha'afro. Not that they always hold. Sometimes they break, and the break is information too. The skill isn't predicting which way. It's knowing exactly where you're wrong. That's called invalidation, and it's the most useful word in trading. Quick recap on candles, straight from my notebook, Waro. There's a full lesson on this channel. The body tells you who won the round. The wicks tell you what they tried and where they got rejected. Hammer, doji, shooting star, aoyaro. Same grammar. Watch the full candlestick video after this one. Now the section beginners skip aoyaro, and it decides who survives. Risk management. Here's the truth. You're going to be wrong, a lot. Even good traders lose 4 trades out of 10. The difference between them and the beginner who blows up an account? Losing small. Before any trade, the pros already know 2 things. Where am I wrong? AU. That's the invalidation, AERO, and what it costs to find out. A common framework is risking around 1% of your account per idea. Not because 1% is magic or because being wrong 10 times in a row, and someday you will be, still leaves you standing. Compare that to going all in. One bad day, and you're done, and no lesson you learn afterward gets the money back. Small losses are tuition. Big losses are the end of school. Last thing, EORU, psychology. Most beginners don't lose because they can't read a chart. They lose because they can't wait. They take a loss, feel it, and jump straight into a revenge trade to win it back. Or they watch a market rip without them and chase it, right as it tops. Here's the reframe that changed everything for me. Waiting is a position. Sitting on your hands when there's no clear read isn't doing nothing. It is the skill. The market opens again tomorrow and next week. There is no last chance in trading, no matter what social media tells you. The best traders are patient people who occasionally trade not traders who occasionally get patient. So, wow. Trading is an auction. Time frames decide how much noise you see. Levels are where the information lives. Candles tell you who's winning. Risks small enough to always survive being wrong. And waiting well is the actual edge. That's your foundation, my friends. Join the Discord below to keep learning with us, and I'll see you on the other side.